We are not going to sing the song as a group. I am not going to sing it on this recording, but you know that debits are on the left and credits are on the right because I have been playing the song repeatedly. Have any of you been humming it? Good. Good. So if you understand left and right, you can do debits and credits. It's just putting new words on some of the first things you learn as a kid, left and right. Okay? Left and right. Abbreviations are debit and credit this way. You might have learned about that in the chapter. And you also know that accounting uses what's called a double entry system. So you need to have at least one debit and at least one credit for every transaction. Sometimes you'll have 2 and 1 or 1 and 2. Okay. 2 or more accounts. And you always need to keep allo and debits and credits equaling each other. One thing that this slide doesn't say, and I would assume the book did say, when you do a transaction, we know we've got at least one debit and one credit. You typically list the debit first. Did the chapter talk about that? You typically list the debit first, followed by the credit. This is in your notes. Perhaps find it in your notes, along with something to write with and a highlighter. Jen, I believe the first row is looking for highlighters from you. Give Bradley the pink one. Our lone junior in here. You see allo 3 times. We could have made just one giant T, and perhaps that would be a good idea. Can I do this on yours? I promise I'll make it straight and nice. I think this would help if you did this. Can you show our girls behind the column? The reason I talked in length about this big T, all of chapter 1, having a left and a right side, is because now left and right matter. We know that there's new names attached to left and right, debit and credit. Okay, assets again are what we own. Write that in. Liabilities are what we owe. Owner's equity is what we're worth, or what's oftentimes called residual equity, or in other words, what's left over. So if I own a house but owe the same amount on that house, my residual equity or my worth, nothing, because I owe just as much as I own. Okay? If we focus just for a minute on assets, these baby T's, notice they have a left and a right side. Instead of, and don't necessarily write this in, instead of writing left and right, what are new names that we could give that? DR and CR. Please write that in. Let's put a name on that account. What's probably the most sought after asset, cash. Okay. What's another asset? Something we own. Equipment. What's another asset? Supplies. And how about one we can't touch, but we're sure after AR? Okay. AR is when a customer owes us. Okay. What I just showed you, other than DR and TR, you know that from chapter 1. You might say, what's the big hype about here, Mrs. Mars? Well, we're just going to start talking left and right. Every one of those accounts, and there's more than just those 4 assets, but every one of those accounts have a left and a right side, or a debit and a credit side. Let me ask you a pretty obvious question. Are assets on the left or right side of the big T? They're on the left side. So if I had to put left and right up here, I also could use the correct terms from accounting. Assets have debit balances, liabilities have credit balances, or assets are on the left, liabilities and owner's equity are on the right. Because assets, and you guys have this highlighted, I don't, because assets are on the left side of the giant allo T, their left sides, or their debit sides, you need to know 2 things. It's where their normal balance resides, and it's also where they increase. Because assets are on the left side of the giant T, each of their little accounts, cash, equipment, supplies, and AR, their left sides of their baby T's are where their normal balances reside and where things increase. I tend to do, and the book will never do this, this is more of a Marsism, normal balance, I tend to star that side. I think it's important you write normal balance there. Wherever the star is, the plus sign goes with it. So equipment has a normal debit balance, and that's where the plus is. Supplies has a normal debit balance, and that's where the plus is. And accounts receivable, because it's an asset, it's on the left side of the big T, so the left side of the little t is where the normal balance and the plus is. Opposite of the normal balance, what do you think it is? I'll say it one more time. Assets are on the left side of the big allo T. So all of their little baby accounts, cash, equipment, supplies, AR, have normal debit balances, and that's where the account increases. Opposite of the normal balance is where the account decreases. If I re-sing a stanza of the rap, an asset increasing is a debit. An asset decreasing is a credit. There it is, visually. Don't necessarily write this in your notes, but let me just tell you a quick story. If the owner invests cash in the business, is it a cash debit or credit? Why? It's increasing. What's the balance right now of cash? 10 grand. Later on, if an AR pays their bill and that AR pays us $2,000, are we going to debit or credit the $2,000? What's our normal balance right now? $12,000. And if we decide to pay our utility bill, we pay cash for the utility bill, $100. Is it debit or credit? An asset increasing is a debit. An asset decreasing is a credit. The reverse is true for liabilities and equities. If you get this, then you get accounting. I don't expect you to get it yet. We're just talking assets right now. Again, going back to the very basics of left and right, anytime an asset increases, it's a debit. Anytime an asset decreases, it's a credit. Or anytime an asset increases, the left side will be a plus. Anytime it decreases, the right side would be a minus. The question is, and it's one of the questions on the test, does a debit always mean increase? The reverse is true for liabilities and equities. So as soon as we get to the right side of this big T, all of those rules that I just taught you are going to flip-flop. Why? Because we're going to move to the right side of the big T. The reverse is true for liabilities and equities. Why? Because they're on the right side. Now we're talking credits. So let's draw this in, and then I'll start giving you some better examples. Let's go to the liability side. Have we made the big step over to the right? What's another word for right? Credit. What are probably the two most popular, well, they're really the only two accounts that you know of right now. AP and NP. It's when we owe to a vendor or a bank. We're on the right side. Do I see left and right sides under these baby accounts? Left means, right means, left means. Does debit mean increase anymore? No, because we have moved, you already have that on there, we've moved to the right side. So now under each of these little accounts, the right side, normal balance, plus, normal balance, plus. Mars tends to put a star by the normal balance. Opposite of the normal balance, minus. Mars, you just got done telling us that debits were the normal balance. On the left side, and debit means left. Now we've moved to the right side, right in this case, because we're on the right side of the big T, it's where the normal balances reside. Let me sing the rap one more time. An asset increasing is a debit. An asset decreasing is a credit. The reverse is true for liabilities and equity. When you get this, then you get accounting. Okay, let's do the two easy ones under equity. We've got the capital account. We've got the revenue account. We're going to stop there. Does capital have a left and right side? I don't want to write left and right. I want to use accounting terms. What's the left mean? Right? Left? We are on the right side of the big T. So we're going to be on the right side of the baby T's. That's where normal balance is. Normal balance also means plus. Normal balance also means plus. Opposite of the normal balance side is minus. Mars likes to star normal balance. We've left two accounts off, haven't we? Let's not talk about those two just yet. I want to now put into practice transactions. You know these two transactions. You know them. But now let's just talk about debits and credits instead. So if it would help for you to go flip that page over, and you've got a blank page on the back side of it. Let's visually do these two, okay? So I want you to write these two examples on the back of that big giant T with all the baby T's. So just write 2 examples. Number 1, fill it in. Number 2, fill it in. Just write that on the back sheet of that blank sheet. In the first one, we're going to buy supplies on account. On the second one, we're going to pay half of the balance owed from transaction 1. And instead of putting it on that giant table that we did in the last chapter, we're going to put it under accounts instead. P accounts, that is. Start drawing this stuff. Before we do the transactions, let's label them. Left is debit, right is credit. Left is debit, right is credit. Even when we go to the other side, there's still a left and right side under AP. Left is debit, right is credit. I also want to label the operators. When we're under the asset umbrella, where does the normal balance reside? Debit or credit? Star plus. Opposite side, credit, is minus. Same thing with cash. Cash is an asset. Assets are on the left side. So the normal balance is going to reside under the debit with the plus. Opposite, credit, minus. If we leave the left side and jump over to the right side, does debit still mean the same thing? It means opposite. Okay, so when we get to the right side, we're on the right side of the big T, so our normal balance will reside on the right, along with the plus. Opposite is a minus. So now we're ready to go. Even in a month's time, you're going to know if you have a cash debit, it's increasing. You're going to know that, but I just visually have to draw this out for you until we get used to it. All right, so let's do transaction 1. We bought supplies on account. Remember, there's got to be a debit and there's got to be a credit. A lot of times when students are confused, I'm going to be like, well, tell me which one you know. Then all the other one's going to have to be the other one. Well, what do we know here? If we're buying supplies, what's happening to supplies or that asset? It's going up. So we've got is it the debit or credit? We've got the debit. So I want you to put it a little like number 1 here. And we're going to say plus 100. So that means supplies is being debited for $100. And if you're like, I have no idea what the credit is, but it's got to be a credit because that one was a debit. How do we pay for these? On account. Okay, it's got to be 100. It's got to be a credit. And does that make sense that it's a plus? Okay, remember last time when we could have a plus and a plus because we crossed the big T? I don't want you to write this in your notes, but let me just pretend it says with cash. Don't write this in your notes, but just let's pretend. That one would have had to be a debit. Would it make sense that cash would be the credit? And then would it make sense that I can do a plus and a minus because we're all in the same? Oh my gosh, it's starting to make sense. It's starting to visually make sense. That's not how we paid for it, though. Do we have a debit? Do we have a credit? Do the debits equal the credits? Does plus 100 equal plus 100? Yes. Let's go on to transaction 2. What are we doing in transaction 2? Did we pay our whole bill? We paid half the bill. So if we pay cash, is it debit or credit? Credit. So what does the other half of the transaction have to be? And which one do we do first? Debit. Okay. So in number 2, we paid half our bill. So we debited AP. We're going to put a minus there. If that's the credit, if that's the debit, what does the other part have to be? And how do we pay? So I'm just going to put it in. I see a minus there. Lo and behold, it works. That's number 2. Now let's stop and see if ALLO equals. If I had to put a number at the bottom, and I ran out of space, so I'll put it at the top. We have $100 worth of an asset minus 50. What's our asset total right now? Does 50 equal 100 minus 50? We had a debit here and a credit. We had a debit and a credit. It all equals. The world is spinning in the accounting world. It's happy. Now, here's where things are really going to get complicated. Real accountants don't use little baby t's with pluses and stars. Real accountants are going to journalize what we just did. I hope you left a little bit of room. Did you leave a little bit of room? If you didn't, that's okay. We'll make room. This is how we really would journalize. Here's what a journal entry would look like. Let's say this happened. Let's say this happened on 9/24 and this happened on 9/25. So we'd put the date in, 9/24. What always gets listed first, the debit or the credit? If we bought supplies, we debit supplies for $100. We credit AP for $100. There's a debit column, there's a credit column. That's what an actual journal entry would look like. That's what an accountant would really do. I think the T's visually help because you're not at this trained stage yet to see that, oh, that asset's debited. That's good. That's a plus. On 9/25, we paid half of our bill. So you're going to see AP be debited for $50. And how did we pay? Cash is credited for $50. That is what real accountants do. I don't think we're ready for that yet. But I just want you to see that that's what an actual journal entry would look like. And then you'll learn later in the chapter that you're going to have to go post that to a ledger. And you're going to have to come back here and say, what ledger page did you put it on? Was it on J1, journal page? You know, we'll have to post. There's a post column. That's for later. That's for a whole nother week. Okay, but I just wanted you to see this is what it, I hope I didn't confuse you by doing this. I think the T's, just you visually see things better. We still need to talk about these two guys. Expenses and drawings. So go back to your big, right here. I'm going to back way up. We own assets. They're on the left side. So any of their little mini left sides are where they increase. An asset increasing is a debit. An asset decreasing is a credit. The reverse is true for liabilities and equities. When you get this, then you get accounting, just like the rat says. I want to introduce to you and give them a new name. Naughty accounts. Drawing. And any expense. expenses would each have their own baby T, but we'll just write expense for now. But it could be utility expense, advertising expense, salaries and wages expense. Just we're going to call that T expenses for now. Now here is why they're naughty. They do not follow the left, which we know is debit, and right, which we know are credit rules. They don't like to follow the rules. They're naughty. They don't comply with the rules. Credit rules would tell me if we're on the right side of the big T, they're credit balances. What do you think their balances are? Scandalous. They're debit balances. Okay, now let's just simplify things here. I see a left side, debit. I see a right side, credit. I see a left side, debit. I see a right side, credit. That's normal, left and right, debit, credit. What's normal though is because they're on the big side, or they're on the right side of the big T, you'd think we'd have credit balances, but we do not. They don't follow the credit rules. So their normal balance is actually going to be a debit. How scandalous of them. We know normal balance sides have pluses. We know opposite of the normal balance side is a minus. Let's think about why they're so naughty. Drawings and expenses take away from the owner's worth. So if we would credit when an owner takes money out, that would be making him worth more, not less. So we have to flip it to make him worth less. Because if you think back to the basic accounting equation, it's plus revenue minus drawing plus capital, or what we kind of know as an investment, minus expenses. I did that opposite of the partners. Sorry, let me try it again. Plus revenue minus expenses plus capital, which we know is an investment, minus drawing. There we go. I knew that felt weird. So we've been subtracting these naughty accounts all the time, but we can't have them follow normal debit and credit rules, because if we credit something under this umbrella, it makes them the worth go up. But we know when we pay bills like expenses and the owner takes money out of the business, it makes them worth less. So if we'd credit it, it would be making them worth more. So we've got to flip it to make their worth go down. So these look like asset accounts, but they're just housed over here. Keep in mind they're on the right side of the big T, so we've got to make their right sides make worth go down. Make the worth go down. Are you confused, or are you feeling good? Maybe you were feeling good until I just did this. Just know they might look like an asset, but they're under the owner's equity umbrella, and they're making the worth go down of the owner. We'll come back to this tomorrow. It will be a really good review. This is in your notes. It's on page 58. This is exactly what I just showed you. Pluses and minuses. Remember, drawing and expenses are naughty. They're naughty because they don't follow the owner's equity credit rules. They buck the system, and they have to. Because if we would credit something and it's a plus, it's making the owner go up in worth, and these are making the owner go down in worth. This is exactly what I just showed you. This is ALLO. This is the expanded ALLO. It's just putting left and right sides to everything. It appears we're watching the video one more time. Here it comes. We're going to do all of this tomorrow and put it into practice, but I can guarantee now that you know what you know. You've read it, you've taken notes, you've listened to me talk about it and do basically a dance/art project up here. Now when you hear this rap, it's going to make more sense other than all the frill stuff where they spill water and stuff. But we're going to watch it again.